Yo, PC Monk here with a different video today. So today we want to talk about liquidation. I've watched a couple of videos to just see what I'm about to cover. Has it been covered before or not? Honestly, I couldn't find any. I just watched like the top five, okay? Maybe my keywords were bad. But anyway, we're going to talk about five things today. The first one is what is liquidation? All right. The second one is the parameters that affect your liquidation. All right. Third one is going to be how to spot the liquidation on charts and its effect on price. So we're going to talk about, so we have to be able to tell, for example, right now, where are the liquidations in this area that we're looking at, okay, without any indicator, without anything. And then we talk about what happened when we hit that liquidation, like what's happening to the price when we hit the liquidations, right? Then the fourth step is going to be the tools to check liquidation and its amounts. Then we're going to talk about some tools that will help you see it visually and see the numbers, the millions of liquidations that would happen in, like, for example, in a specific price point. And the fifth one is going to be the how to use it as a confluence in your own trading setups and your trading rules. So from fear to edge, right? So that is it. Let's talk about it. So what is liquidation? So liquidation is when your position hits and goes into negative so much that you don't have enough collateral to support it, and then the exchange forcibly close your positions, right? So that is basically liquidation. It's like when your fund, you don't have enough funds to cover the negative as the price is going against you. All right. So on the exchange is going to be like, if you don't have enough collateral to support this, I'm going to close your position, and then I'm going to take your money as well, right? That is liquidation. Now, here is a difference between when you have a cross mode or isolated mode in your account. Okay, there's a difference between these modes, and the liquidation will be different. Okay, but we're gonna talk about them in the second step, which is right now. So the parameters that affect your liquidations are only two things. Two things. The first one is the margin that you put in, and the second one is the leverage that you're using. Now you'll be like, okay, so wait a second, what is leverage itself? Very simple. It's you are multiplying your money by borrowing from the exchange. That is it, like a 10 seconds explanation. All right. So if I have $1, okay, and I have my leverage at 100, so that $1 is going to be multiplied by 100. So my margin is $1, right? But the leverage is 100, so the position size will be $100, okay? So there is a calculation that how your liquidation gets calculated. Obviously, there's a formula to it. But we're going to skip that part, but we're going to just talk about a couple of examples, okay? So for example, if you have an 100x, so your position will be $100, and then the price only needs to move 1% against you to liquidate you, right? So now we come back to the cross and isolated type of liquidations. So what is the difference? So when you are trading in an isolated mode, meaning every position is isolated from the rest of the account. Okay, so for example, if I open one position, $1, 100x leverage, then when the price moves 1%, okay, against me, I'll be liquidated, meaning my margin will be gone and I will be giving back the borrowed money to the exchange. So not only I'm giving back that $99 that I borrowed, the exchange is going to take my money as well, right? Because I got liquidated. So now if it was cross, then it's different. The cross, so in isolated, the collateral is your margin only, okay? But in cross is not your margin for that specific position, is the whole account, the whole futures wallet. And now some exchanges have the option to allow you to actually get money from your spot wallet when your future wallet goes to zero. but that is a different story. But we're talking about the future wallet. So in the future section on every exchange, you have a wallet called the future wallet. When you are in cross mode, if you open $1 on 100x leverage, your liquidation will not be 1%. Your liquidation will be when the whole wallet goes to zero. Now it really depends how much you got in there, right? So for example, if you have $100 and then you open a $1 on cross, it's not going to be 1%. It's going to be bigger than that. I'm not going to go into calculation. I don't want to make it, complicated. But that's the difference between cross and isolated. Okay, so now we know the two parameters, which are margin and the leverage, will act. The liquidation will act differently depending on the position that we're opening. Is it isolated or is it cross? All right, so now we know that. What else we want to talk about next is, so the third thing, this how to spot liquidation on charts and its effect on price. So now we know what is liquidation, we know the parameters. Now let's talk about this little area here. Doesn't matter, you could pick any area and we could talk about it, but let's just talk about the area that we're here right now. All right, so right around here, okay, obviously you need to know a little bit of price action to understand where the liquidation is building itself. But wherever you are building positions, okay, so where are you consolidating? That's where the liquidation is going to come in. Okay, so for example, right here, without looking at any chart, I could tell you, since this is our high, meaning a lot of shorts got open here, then we come back to the same range, right? And then we started opening more shorts, I would tell you there is a good chance that around 118, 818, so around this area, we have big liquidations. So how do you spot these? Where look at your chart, okay, on a higher time frame. We're talking about 1 hour, 4 hour daily time frame. Wherever you're consolidating like this, wherever you see wicks, but they get the rejected, this is where you are building your position. So at any place that we're holding for more than 2 to 3 days, there will be huge liquidations. Obviously, there are liquidations at every point. So even right now, for example, there are liquidation above this area, which is going to be this area if we want to just draw a rectangle. So right here, this area has some liquidations as well. Why? Because we've been holding it for 4 hours. So people will be building their shorts around here and their liquidation will be here. Now, obviously, the places where the liquidations are, it really depends on margin and leverage, but we're talking about the high leverage liquidation, which is going to be 1 to 2% from the current price, right? So that's it. Now, if you go with like a 20x, your liquidation price will be higher. And then again, is it isolated? Is it cross? Okay, so these matters. Now, what happened when price hits a liquidation level? So for example, if we're going up, okay, so this is a good example. If we had a lot of liquidation above this, guess what? We shake them out a little bit, right? So we liquidated a little bit of people here. So what happened when they got liquidated? When the shorts gets liquidated, what will happen? So when shorts get liquidated, you are forced to buy, meaning you are buying back what you sold. That's how a liquidation works. And vice versa, when a long gets liquidated, you are forced to sell what you bought, right? Because you cannot afford, the price is going against you, you cannot afford it anymore. So that's how it happens. So if we're going up and people are getting liquidated, the liquidation is like a fuel. Okay, it fuels the price towards that side. So if we're going up and we're getting liquidated here, if there's and if there's no buyers, right, or if the liquidation is huge, you might see as we're going up a huge spike. Suddenly, a huge spike happens, right? That is uh, the liquidations fueling the price. So you could see the same thing happen on this big dump. A lot of liquidation fueled the price to just dump it more, dump it more, dump it more. But then this wick happens. So this is a side note. Wherever there are big liquidations, there's always big orders waiting to be filled. Okay? Why? Because the market maker uses retailers' liquidations to fill their positions. Meaning what? If you're getting liquidated on your stop, on your short tier, meaning you're forced to buy, so who's gonna sell to you then? The market maker. So the market maker is using those liquidations to build his positions and then push it where it wants to. So the market maker opens some short here, and then it moved around here, opened some more shorts around here, using the liquidations of these people, and then we slowly moving down, right? That is what really happens to the price, and how the price gets affected by liquidations, and obviously the big orders lying around the liquidation. So now we've talked about the third one. Now I want to show you guys some tools and how you could spot these, and obviously we're going to talk about the scenario that we talked about here, that where there are big liquidations, there are big orders. I'm going to show you guys that at the end of the video, uh, or maybe right here. All right, let's jump into the liquidation tools. I'll be linking all these tools at the bottom in the description so you could use it on your own. All right, the first one that I want to talk about is CoinGlass liquidation heat map. You could open CoinGlass, you could go to liquidation. You have three types of liquidation heat map. I'm going to talk about probably one of them only, because I don't want this video to go more than 20 minutes, and we're already at 11 minutes. So this is, for example, a liquidation. I was looking at Solana. We could just change this to BTC. Usually you should take a look at the liquidation on an exchange that has huge amount of volume, like Binance, right? You don't go look at the liquidation on some very small exchange that not have much big players to play with. Now we're looking at the liquidation. So there are two types of heat map that you could have on the liquidation. It's yellow, green, and then purple, or yellow, red, and purple. I've chosen the yellow, red, and purple, as you can see here. Now, there is the time frame of the liquidation, so it show you the time frame. So if you're looking at 24 hours, for example, you're looking at these. The brighter the color, the bigger the liquidation is. For example, on this cluster, if we move up all the way to $112,561, we will liquidate 71 million in just one cluster, and that is the cluster. Now, towards downside, for example, right now you could see there's not much liquidations, right? But here's a catch. The liquidity threshold, meaning how much is going to get taken from the market when we hit that liquidation point, okay? That's the threshold. It's high now, so it only shows you the high ones you could see. Now, if I decrease this, the brighter colors would be on a smaller amount. So, for example, if I put it on 50, right? You can see we are getting more brighter colors, and the reason is the threshold is decreasing. So for example, now we have a bright color here. It's for 75 million. We have a bright color here too. It's for 44 million. Now this 44 million, if I again increases it to, for example, 9, it's not as bright as it should be, right? Because the threshold is now higher. You're looking for bigger liquidations. Now, we've talked about it on the chart that wherever you start to build positions is where you're gonna get liquidation above or below it. So we've talked about here, right? I've mentioned this area to you guys that were the market maker or the big money started to build their position. They dumped it, they came back. So you could see the liquidation starting to form around the peak of this area. You could see this color. For example, it was not as bright. Okay, so it was 57 million, and then it goes to 67 million. So 10 million got added to it worth of liquidations. Okay, so and then we started to come back down. As we were going up, people were building their positions here. They got liquidated, right? And then again, around here, we were holding it. So you could see from around here, shorts were piling, piling, piling. So maybe you're getting an idea of how to use this now towards your own trading rules or trading setup. So we get to that. So this is how basically one of the tools that you could see, and it shows you on the left side, the biggest liquidation amount. The brightest one is that 75, which we actually mentioned it here, right? I'm pretty sure it was this one. wasn't it? Well, then there's something else. Okay, but that's the brightest one. And the smallest one, if I could scroll down, is basically zero, right? So right here you could zoom in and out. I think because yeah, this is the 74 million. We were zoomed in a little bit, that's why we couldn't see it. Now you might be like, okay, so what is this? Right? What is this? I'll talk about this. So CoinGlass has a similar liquidation map that will show you this only, but they put it in here too. But you could see the CS or the it doesn't show you the cumulative short liquidation leverage. That's why we're gonna skip that part. All right. So this is another type of heat map. Same scenario, guys. Same scenario. It's just the color is different. Okay. Now, if you go higher in time frame, you see bigger liquidations. Okay. So higher in time frame, so you could see bigger liquidations right now. If I decrease the threshold a little bit too, okay, now you could see the biggest liquidation is 85 million. We don't know where it is in this chart, but we know it's the brightest one. So we look for the brightest one. I think the brightest one are around here, right there, $111,958. That's going to be the big liquidation, 85 million in one cluster. Keep in mind, these are all one cluster. This is not a cumulative one. We haven't yet talked about that too. All right, so again, 31 million. You could just talk about it. Now, I've said to you guys this, wherever there's liquidations, there's big orders. So I think you guys are going to get the point of how you could use it in your trading, but we'll talk about it. So that's one. The next thing I want to talk about, the next tool is this tool. Okay, I'm sorry, not this tool. This tool, okay. So this is the liquidation map. We're on Binance one day. This only is going to show Binance. You could see there's 10x leverage, 25x leverage, 50x, and 100x. Now let me tell you another tip here. For the market maker, liquidating 100x and 80x or the high leverage people is super easy, and the market maker really does not gain that much from those liquidations because most of the money is borrowed from the market maker himself. So when you get liquidated on a $1 with 100x leverage, basically the market maker is first of all getting back his $99 that he gave to you, and then he's getting that $1 from you on top of that, right? So he doesn't make money out of this. But when you talk about the 10x and the 25x leverages, those leverages are the traders have to put more money from their own pocket into the trading. Meaning, if I want to have like a $4,000 position on a 20x, obviously I have to put more money and then I multiply that by 20. Okay, those areas those areas are the ones that the market maker and the exchange is interested to get liquidations, because at that point the borrowed money is less than the money from the trader itself, right? That makes sense. So that's where the market makers usually make money, and that's where sometimes it takes time to hit the like these type of liquidation. It takes time to hit there, okay? And there's a reason why we don't hit these liquidations right on the spot, because you are going up or down. So the market maker needs to build his positions. It needs liquidity. That's why you don't go there, as soon as possible. That's a video on its own. I cannot go into the detail into that, but just as a tip. So now you could see this is only for Binance. Now let's scroll down. This is for three exchanges: Binance, OKX, and Bybit. Okay, but you cannot tell the types of leverages. You could just have these three exchanges. Now in here you could tell there are a lot of high leverage 100x and 50x leverage around $112,787, right? So 50x leverage is 6 million, 100x is 10 million. But there's another thing. It says cumulative short liquidation leverage 436 million, meaning if we start to liquidate, if we come up from here all the way to this, that's going to be the sum of the whole liquidations. Cumulative short liquidations, meaning the sum of all the liquidations until that specific point. So now we know that as well. Now keep in mind, this would be different as we're coming up. A lot of people will close their positions. A lot of people will close their positions at break even. But if If they don't close it, they're gonna get liquidated around this area, right? So there are, like for example, if I have a position, my liquidation, if I have a short right now, my liquidation might be at around 112,000, 163, but I do have a stop loss before I hit that, okay? So when I get out, this liquidation is gonna decrease. Keep that in mind. Now, the good thing about this tool, which shows you on the three exchanges, you have a good cumulative number. So for example, if we come up around 114, okay, which is $2.89 billion worth of liquidations, right? So you have the cumulative liquidations of three big exchanges, which will help you determine what might happen. Okay, so that's another tool. The other tool is Coinank. Now, this is not a free tool, but you could have the trial enabled on it for a week. Now, let me just turn off the footprint on it so we could talk about the liquidations. So, for example, you could take a look at the liquidations on the 1 hour. So, we have a couple of indicators on Coinank. The first one is liquidation map, which is basically what we just saw. This is the same thing. Not this one, sorry, this one. The same thing. If you take a look at this, we just have it vertically here, right? That's the liquidation map. It doesn't show you how much is about to get liquidated. It just shows you the it's not the amount, but the amount is huge. You could recognize it by these lines. The the small amount, or the the leverage, my bad, the leverage is huge. You could recognize it by these lines. So if it's a high leverage, you're talking about yellow and orange. If it's a low leverage, you're talking about navy blue and those kind of colors. All right, and there's another tool called liquidation levels on Coinank, which you could see here. Now, we could talk about some stuff here. For example, take a look at this. We liquidated a lot of people around here. So that means there were a lot of orders getting filled there, big orders. Now, Coinank will show you the big orders. CoinGlass will show you the big orders as well. Now, I'm just going to cover it on Coinank just to show you guys that this is always happening. Where is big liquidation, there is big buy and or big sales happening. Now, for example, if I turn the large orders here, you could see these are big spot orders getting filled. Now, this is only showing you the spot orders. Let me just turn the perpetual orders as well, and then you could see the enormous order filling on this. Let me just go on a 2-hour time frame. It might take a little bit to show the large orders because, well, they are huge. They are huge. It's not showing anything. Hello? All right, okay, there you go. That's how huge it is. So you could see the green, right? So let's talk about this wick. Just this wick that we did yesterday all the way to $108,000, which we covered it, by the way, yesterday on my YouTube videos. So how much we bought around here. And you can see there are more buys coming in, but I want to talk about this area only. Okay, so let's see how much the buy turnover was. All right, so we bought 122 on perpetual on Binance, right? Uh, the remaining orders are 461, right? 461. So you could see the amount of big orders, like 10 million got bought here, 4 million, 3 million. So this is it, where you get liquidated, where a lot of traders gonna get liquidated, a lot of traders gonna get their order filled. All right, so these are the tools that I talked about. Okay, now how could you use this as a confluence? So, well, the big money, all right, market maker always looks for liquidity, right? So if I'm about to buy over $100 million, I cannot just press a buy button. That will not work. I need people to fill me my buy. So how is that possible when this liquidation happens? So when people are getting liquidated, what is happening is they have to force sell what they bought. So who's buying that force sell? The big money, the market maker. That's how they build their positions. So you could use it as same as the market maker. So whenever you see big liquidations, right, for example, around here, and right now we have a big liquidation towards upside around here, around 112,156, you could think about there are large orders coming in, big orders, so big shorts coming in. Now let's take a look at it. You could see the large orders are actually huge around here, right? They're actually huge around here. Why? Because there is liquidations. Now, let's just take a look at this area. For example, we have a 22 million short ready to be triggered. Okay, so me as a retailer with my $1 position, obviously I'm not gonna go open a position randomly. I'll wait to see where the big money wants to play and I'll try to be part of that. Okay, so this is how you could use liquidation into your trading. You come and see, okay, so there are huge liquidations going to happen over here, right? Meaning there are a lot of people shorting right now. So if the market maker wants to continue down, we could come back up, grab these liquidations, and then continue to move back down. So as we are grabbing the liquidations, the big money is filling their shorts for a continuation towards downside, right? That's how liquidation is a confluence in your trading. You find the big areas of liquidations, then you check to see if there's big orders coming in too, right? And it's usually like that. It is usually like that. For example, I could just talk about here. We've talked about it before, and this would be the last thing I'm going to talk about. So there were a lot of liquidation around here. Guess what? We wicked it a little bit above, cleared a little bit of it, and then we continued down. And this was your invalidation. And today, I think BTC it could happen both sides. I don't want to do a TA here, but that is it, guys. Literally, that is liquidation. I don't know if it was a good video or just a rambling video. I hope you guys enjoyed it. It's 26 minutes, but it was an in-depth and details video. So thank you guys for watching this. Stay safe, stay green, stay patient. I don't know if I want to do another video like this. I have to see how this video reacts and how many people see and watch and subscribe and all that and things, you know. Anyway, thank you guys for watching. Stay safe, stay green, stay patient. Hopefully you guys will never get liquidated and you always will use liquidation to your own edge and benefit. Peace out.